Hey, good morning, everybody. It's Monday, July 6th, 2026. Welcome back to a fresh new week. I'm Hammer from Hammer Solutions, home of great products such as Originator Success, Grab and Go Social, and Rate Sensei. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasted to you on Facebook and on YouTube. If you're watching on the replay, do me a favor, give me a hashtag replay in the comments. Let me know that you were here. Feel free to jump ahead till we get to the good stuff. If you are here live, make sure you say good morning. If you have not signed up yet for our daily text reminder that we are going live each morning, you can sign up. I send out this text as I'm going live, so you don't miss a moment of the show. It's hmmr.io/reminder, or use this cool QR code over here. If you're watching on the replay or you're currently on your phone, take a screenshot, and you can actually press and hold that. It'll work for you and open up that link, and you'll be able to sign up and get the reminder. Also, while I'm talking about it, make sure you sign up for our daily lock advice emails. You can sign up for those at www.ratelockadvice.com. This is what the email that goes out looks like each and every weekday morning. Quick recap: what happened on the previous session, the outlook for today, and then I break it down into the outlook for the next 15 days, 15 to 30, 30 plus, and then give you the quick technicals, what's going on with the actual bonds there. Everyone always likes the quick at a glance lock and float meter. And of course, you got to have a great quote of the day. So we got that on there as well. You can also sign up for our text alerts at www.ratetextalerts.com. This is what those look like here. Every morning around 10 a.m. Eastern time, we're going to send you a text to tell you what's going on with the markets. And then we're going to send you a wrap up. Now, Thursdays, of course, a little bit shorter than normal, but you can see what they normally look like. And then when there is risk of reprice, we're going to send you alerts to help you protect your pipeline. So make sure you sign up for those at ratetextalerts.com. So enough on the selling front. Let's go ahead and say hi to all the live folks. If you're here this morning, say good morning, my friend. So glad to see you here. As I said before, remember, you can join me live at 9:30 a.m. Eastern time. This morning's lock advice is to cautiously float all loans. Stick with me. We'll talk about why we feel that way and what that actually means. So I see a bunch of you are on this morning. All right. I'm going to go ahead again. Welcome to the live folks. Jessica Wells, haven't seen you in a while. Hope you're well. Mike Schmolgan, Deb Dickinson, Almir Krivdik, Brady Brickler, Harry Dennis. Good morning, Holly Johnson. I too hope you had a great weekend. Thank you. Michael Garcia, good to see you. All right. So let's go ahead and jump in. Let me get the screen up. We'll go over the technicals here. Let me pop this in, bring this on over here. All right, so let's start off with the technicals this morning. Where are bonds at? You can see that mortgage-backed securities currently up 8 basis points. Nope, this one. Here we go. Currently up 8 basis points on the day. The 10-year treasury yield at 4.47. That's what we're sitting on this morning. A quick recap of what happened. It's been a long weekend. Everything that you see over here, this is actually Thursday, and you can see there's this long straight line because bond market closed at 2 p.m. Eastern time on Thursday. This is actually dead space, and it goes to where it opened up this morning. So it was closed on Friday, of course, for observance of Independence Day. So opening up this morning, bonds were a little bit better than where they're at now. They're still up 8 basis points, but they would have been up more. Kind of lost a little bit of ground as the markets opened. Again, we are a little bit better than when pricing came out on Thursday. So basically, rate sheets today should be slightly better. Rate sheets were coming out on Thursday. Mortgage bonds were around 100.25, 26. This morning, 100.34. That's up 8-9 basis points. That means that your rate sheet pricing here should be a little bit better than what you saw. So instead of 6.60, you're probably back at like 6.58. Probably look like 6.58 like we saw here. What you'll notice is we are in a very, very tight range. Rates have been very stable. I know that doesn't feel stable because you've got rate sheet movement, and sometimes consumers don't necessarily get that. But I know many of you have been in the business a long time, like I have, where we would see rates move an eighth of a point or a quarter point for day to day. And this is just, we have not seen rates move more than within an eighth of a point for the last month. And it's very likely we're going to see more of that. So we'll keep talking about that in a minute. Reprice risk on the day is low. Mortgage-backed securities currently up 8 basis points at the moment. Let me adjust the size of this here. And see, whenever I do it from that side, it always readjusts. I got to remember that. All right. So anyway, mortgage-backed securities currently up 8 basis points on the day. Not likely that we're going to see them lose much ground. There's really nothing going on this morning. At 10 a.m., we're going to have some ISM non-manufacturing data. That's a little bit of an ability to move markets, but not much at all. And other than that, it will be a very quiet and calm day. A couple of things to point out, though. If we take a look at the technicals here, once again, you will see that the mortgage-backed securities, see this red line? I'm going to get my head out of the way for a minute because I want to go to this full screen for a minute. So hold on. Let me change to this. All right. So I want to show you guys. Here we go. Take a look. This is this morning. So it's a red candlestick. Even though we're green, we're up 8 basis points. It's a red candlestick. And people say, Hammer, how can it be a red candlestick? It's because we started the day here at this higher point. So we started higher on the day. And since then, it has actually fallen down. It's still higher than where we ended here on Thursday, but it's less than where we started the day. So it's a red candlestick, even though it is actually up on the day. Now, what I want to show you is I want you to pay attention to this red line, this 50-day moving average, this red line right here. I want you to pay attention to that 50-day moving average. What you'll see is that this basically right here, this is when we went to when we had the Iran conflict start. So this is when we started bombing Iran. Everything started to go nuts. Oil prices shot up. Mortgage bonds went down, hit the floor. We thought we were going to see an end to it the first time that Trump said, hey, we're wrapping this thing up, and bonds started to rally. But it didn't really happen. Bonds lost ground again, hit their worst levels back here in May. Since then, we've seen recovery as we have seen an actual reopening of the Strait of Hormuz. And we've seen bonds just kind of stay very tight in this range right here. Okay. Now, what is the reason I'm bringing this up and what's so important here is that if you look, we broke below the 50-day moving average. This is the only time since back here before that whole thing started. Bonds have spent the whole time below the 50-day moving average here, and they have not been able to stay above the 50-day moving average for, like, we had a little bit of a blip here, we had a little bit of a blip here, but we are back and forth above and below that 50-day moving average. Now, for mortgage-backed securities, we want to see if this is going to give some support and if it would become that we can hit the 100-day moving average, this green line, which is held here, it's held back here. And we haven't been above that 100-day moving average since over here before the whole Iran situation. So we're looking to see now. It's very unlikely that bonds are going to break through the 100-day moving average, though. Very, very unlikely that we're going to see much improvement here because there's just not anything happening in the markets, in the headlines, in the data. Next week, when we get the inflation data, it's at best, it's going to show some disinflation, that inflation is cooling in June, but it's not going to be strong enough that we can expect to see a breakthrough here. So we're looking to see this. Generally, this means your rate sheets are going to improve a little bit. There is some room. And that's why, for now, we want to go ahead and we're looking at anything in the next 15 days to go ahead and cautiously float that. We've got some room to improve, and we've got some support with that 50-day moving average. So we want to watch this. We want to see if we can get a little bit of an opportunity for some better rate sheet pricing, but don't get greedy. Don't expect rates to actually improve much from here. It's not likely to happen. Now, for the next 15 to 30 days, you can cautiously float. Again, same thing. Anything 15 to 30 days puts us at the end of July and getting into the beginning of August. there's really, you're not really, those loans are going to close before you see the next jobs data. And even that, even on Thursday, we did get improvement from that relief rally after the jobs data came out. And it did come out weaker than expected, but it wasn't enough of a rally to get super excited about that. You're like, oh, hey, this is really going to help rate sheets. All it did was help rate sheets improve back to where they were a day ago. It really, a day or two before that, it really didn't like start a big rally. There was a little bit of a relief rally because bonds were holding their breath in case it got worse, but it really didn't put us in a great position. So we can cautiously float, but don't expect large improvement, but you should be able to see some opportunities to get rate sheets that are better than what we're seeing right now. But very much be aware of how much better. Let me take a look here. When you pop this in, we're looking at some of the better rates. If we look at what we've seen in the last month, you get down to like say 6.52, or over here with 6.54. I mean, if we're seeing Mortgage News Daily give us those kinds of numbers, 6.53 right here, 6.52, when we get those, then we're back into locking them up because it's likely that we're not going to see much improvement beyond this. And we saw that at the end of June. And we were locking back then because I said I felt like rate sheets were capped out and weren't going to improve. And then we did see rates start to creep higher. It's not a big move. I get it. It's not like we're saving somebody from, a quarter point jump in rate. But it is, rebate pricing, and people do care about it. So as far as 30 plus days, rates are in a really tight range. There's no concern that we really have to worry about things, happening there. We want to definitely keep an eye on the Fed outlook. It really hasn't changed. Markets continue to believe that we've got a chance of a rate hike to come in July. We want to watch this. It's the end of July. We've got almost a whole month left. If we start to see expectations of a rate hike increase here, that means rate sheets are going to struggle to improve a little bit. But the big thing is, where do they plan on being at the end of the year? Markets are pricing in at least one rate cut. It's only a 22% expectation we can see rates remain where they're at right now. Markets believe, I'm sorry, I say cut, hike, not cuts. And that's the problem is we were in rate cut mode. Now we're in rate hike mode. And that's why, even though oil prices, by the way, have come back down, oil is trading almost the same as where it was at the end of February when we had our best rates. February 27th, I mean, look at this. You were at 70.85. Then it was 70.75, 72.48. We're right there in 71, 70, so we're right there in that range. We're right within $1 of where we were at. And yet, mortgage rates are a half a point higher than where they were. And it's not because of oil. It's because of the expectation of Fed rate hikes. So, unless that were to go away, we're not really in a position to see mortgage rates improve much. And that's kind of our take there. So anyway, that is what we've got going on. I hope that gives you something to work with for the week. Again, thanks for joining me. Let me know in the comments. I got a question of the day for you. Who saw fireworks? How many of you went to see fireworks? And did anyone see a drone show? So I did my webinar on Friday, by the way. Thanks for those of you that joined me. I was really not loving it. I definitely am rusty. That's why it was a webinar warm-up, as I called it. And I only put out there one call of action for people to join. Definitely need to tighten up my webinar game a little bit. So I ran long. I thought I'd be able to get this thing done in 30 minutes, and it was nowhere close to 30 minutes. Fireban in Breck, they had a drone show. Mike, was the drone show and the fireworks at the same place, or did you see both? Was that actually, or did someone do both where they did fireworks and drones? I don't know where Breck is. Where's Breck? But yeah, drone shows are, definitely, Sean, we watched from home. We watched Boston, which had a drone show and fireworks. We let off about 4,000 at your friend's farm. You go, girl. That's fun. Hope you guys had a great time with that. And that obviously everybody was safe and okay. So sounds like it is. My bigger concern is always that fireworks are cheap and made in China and the quality. You felt the fireworks in Clearwater, Florida. They were somewhat lame, not like it used to be in years past. Really, even with the big 250, I mean, Nashville had a killer firework display. So did Washington, D.C., of course. Same place, drones before the fireworks. That's pretty cool because I'm a I mean, who wants fireworks more than drones? I love that boom boom. I know that it scares the pets, it scares the animals. I get it, but I love that boom of real fireworks. It's kind of like why I ride a Harley, you know. You live right by Community Park. Stepped outside, saw the drone show and fireworks. Same place. Very cool. No fireworks or drone show. Fireworks are banned in your city. That sucks. No drone show though. The go to the friend's house, watch several fireworks on the Maumee River from her home. Very fun, very cool. You forgot about the webinar. You were sitting on the couch. You could have watched you. Yeah, it's all right. Don't worry about it. Again, it was not my best. Just drone show, no fireworks allowed to the fire ban. The parade was awesome. Breckenridge, Colorado. Okay, all right, that makes sense. Yeah, everybody has all their digits. Remember, I was a Giants fan when Jason Pierre-Paul blew off his fingers. Provo, Utah incorporated drones into the fireworks. So it's very cool that that's becoming much more of a thing. But all right, my friends. Well, again, thank you for joining me. That was a question of the day. Thanks for sticking around for that. And Ron said, I used to be on a community committee for July 4th events. Fireworks shows are very expensive, over $1,000 per minute. Yeah, they are. I mean, you know, but it is the 250th anniversary. God bless America. Love me, my America. And so I hope everybody at least had a great weekend and got to enjoy it. So, Randy, you thought the webinar was solid? I thought the webinar sucked, but thank you. That's very kind, my friend. Very kind. So, all right, I'm going to wrap up. You guys have a fantastic day. I will see you tomorrow, I hope, and take care. Bye-bye, everybody.